IPTA, the algorithm that ICT talks about, there are 5 different ways you can identify IPTA's footprints in price action. This is probably one of the most important things in ICT trading concepts. Number 1, precise price action that is to the tick, undeniably too precise, that it couldn't be anything other than an algorithm participating in the price action. Let me give you an example here. What you're looking for to be able to tell that IPTA, the algorithm that ICT has named that controls price, is you're looking to see the algorithm respect price to the tick, very precise price action. I like to look for closes of candles personally. That is where I find the edge there. I want to see that when it's coming into a fair value gap, that the candles are not closing beyond the fair value gap. As you can see here, this is very precise. None of the closes are closing below the fair value gap. Price eventually takes off, and that is a huge sign that the algorithm is participating in price and is not allowing price to close below the fair value gap. And then here is another example in the same part of price action right here. So you have a fair value gap from here to here, right? But look at that. The closes are inside the fair value gap. They're not outside of it. When you see something like this, you should be thinking of it as, okay, IPTA is participating in price. It is likely that this is the correct fair value gap that need to be filled, and price is going to continue upward now. The last example was on a 3-minute chart. Here we are in a 1 hour. You have a run on liquidity. Boom. The last up close candle before the run on liquidity is right here. Now look at where price drops down to twice right here. Here we are on a 1 hour chart. That last one was on a 3 minutes. I wanted to give a couple examples, different PD arrays, different price action that IPTA is interacting with, and showing her hand of precise price action. You have a breaker, which you have a run on liquidity, which is going to be right here. It runs this low. There's your run on liquidity, right? This last up close candle right here is going to be your breaker block. Now, when price comes back down, after making this big move up here, and then price comes back down, where does it come back down to, and how does it react in price? As you can see right here, I just simply put a line on top of the green candle, your breaker right there. Look at the precision on the price action there. That is showing its hand that IPTA is in fact participating in price here. Now these clues are going to be probably the easiest way to tell if IPTA is participating in the price action, because the algorithm's not always going to be participating in price. Now, number 2, we're zooming right along here. Number 2 is going to be traps in price action. These can be bull traps, bear traps, equal lows, equal highs, however you want to look at it. There's your equal highs. They're going to act as magnets for price. You have your breaker right here, ran liquidity. You have a trap up here. What's it likely to do? It's likely to go lower, but first they're going to set a trap on this side too. So price comes back. Boom. Now you have your third touch to this area. Even more liquidity is built up here. And then there you go. There's your equal lows here, right? Let's see what happens. Boom. So they run the liquidity above. They fill an inefficiency in price. Anytime there's equal highs or lows, there's going to be an inefficiency on the other side, just like you see here. But you have the run on liquidity. Now they're going to attack this second trap here and take it lower, fill the inefficiency. If you know this and you know that this is one of IPTA's signals that she's participating in the market, you can trust going short here and then target the break here. Number 3, respect of PD arrays. This one is the first clue I actually found on my own in the price action and pushed me over into profitability once I found it. When IPTA is participating in price, one of the major footprints and clues that is left behind is respect or disrespect of fair value gaps, or any PD array for that matter. Any of your mitigation block disrespects the fair value gap. disrespects the mitigation block. And what does price do? It goes higher. There's your footprint. There's your clue in price action that IPDA is participating in the long side, not in the bearish side. Number 4, displacement. We're just banging these out. The displacement is what you can consider fair value gaps being created, inefficiencies in price being created. It's fast, aggressive price action. Displacement might be the biggest clue in price action and probably the easiest to see and the easiest to just visualize on the chart. It by displacement, fast, aggressive price action. That's why in the graphic you just saw, it was water being displaced. Think of an elephant jumping in a swimming pool, and then all the water that splashes over the edge is being displaced. We want to see that in price, and I found a good example of it. That right there, that displaced price is not normal delivery. It is not trending. It is just fast, aggressive price action. When you see this, you can bet that the algorithm is in fact bearish, right? A lot of times it is going to come back up and fill it, but it is definitely a sign that IPDA is participating in price. Let's see what happens here. So then you have a move up and you get a rejection and price continues lower, as should be expected. Anytime you see displacement, which is an inefficiency in price, right? Where neither side of the market really had a chance to participate because it was just too fast. As you can see here from price action, this displacement, it was like your trigger, right? You had a consolidation in price from here to here. Did it come back down and bounce again? No, it displaced through it. Through the consolidation, it just displaced through it. So there is your footprint right there. Was this price action normal right here? Was this normal? No, this is displacement. Yes, it is a fair value gap. There's 2 fair value gaps there. But it is IPDA showing her hand that price is likely to go upward now. So once I see that, I'll look to see, okay, there's displacement up here. It's likely to continue higher and fill that displacement in price, which in this example, it's a gap. All right, the next one, number 5, is 50% of PD arrays. This is also known as consequential encroachment, which you won't catch me saying that fucking word. It's stupid. I'll just say 50%. I'm not sure why ICT called it this. Consequential means the nature of a secondary result having significant consequences. Encroachment is violating the property rights of another property owner. Encroachment is an unauthorized intrusion, and so on. So you can see that the 2 words together do not mean 50% in any kind of way, shape, or form. There's a million different other words he could have used: 50%, halfway, half back, and the list goes on, but instead he chose consequential encroachment. But anyways, I don't know what goes on in dude's head. That's just what I think. We're going to take a consolidation here. You have a big consolidation before a big move up. We're going to take the low to high of this consolidation. We're going to look to see, does price respect 50% of this consolidation here? Let's go forward. Right there. So there's 50% of consolidation. Why? Because this is going to be let's go to a 10-minute or so chart and look at what this is. So on a 10-minute chart, it is a doji candle or a down close candle. If you tighten this up to that down close candle there, it is 50%. Let's go to a 3-minute time frame. Let's take this last red candle here, grab 50% of it, or grab it. That's this candle here, 50% of it, respected. Let's see what happens with price here. It goes way the fuck up. That is the algorithm's hand showing its hand in price. As you can see that 50% is a major level for all price action. And there's 50% in other areas of price as well. Not just pretty much every other time frame, but other things as well. So you have breaker blocks, you have wicks, you have rejection blocks, which are going to be wicks. Let's take 50% of this wick right here. I'm just picking random areas in price action and looking at them. As you can see right there, we zoom in 50% of that wick. Go to ES on a 1 hour chart. And then the best areas to find is when price is coming into external range liquidity areas. Here you have a intermediate term high, which is another area you see this happen a lot too, is intermediate term highs and lows. The rejection block of those, you do see that as well. There you go, 50% of that middle wick there, which is a intermediate term high because it filled an imbalance. Right there, rejects. And then you have order blocks, which I really like order blocks. You have this last up close candle before this move down, price returns to 50% of it, rejects. As you can see, I can keep pointing out a million examples. I can go into breakers, I can go into all of them. But the best way to use it is on really low time frames. So you have displacement down right there. And then you have price going to 50% of this candle here, which it lands right there on the dot. That is a footprint for sure. I personally use this to pass funding evaluations on pretty much any time frame, but usually the 3 minute and the 30-second. I'll look for displacement downward. Like here, you have a couple really fast candles down, and then I'll take the candle there, I'll highlight it, and then I'll wait to see the IPDA footprints and price, looking for an exact 50% touch, which you get right there. And then they provide really low risk because if you're watching while price goes into there, you wait for a little reaction, you enter and you put your stop just there, only risking a very small amount. You have a doji right there, take it, same thing, and so on. If you're interested in getting funded, I personally have a few companies I really like. And I went through a period when I first started trading, trying out funding companies and having to deal with all the bullshit that goes on with them. What I ended up doing once I got funded and found some good companies, I started my own website. It is verifiedfundingcompanies.com. You can head to the homepage here, and then if you go click here, I have the best discounts in the funding space by far. You can subscribe to my newsletter. You'll get tips and tricks on how to get funded, pass funding evaluations, and stay funded. But Blue Nox has two sales, or has one sale, 90% off all accounts. Use the code JKing90. This sale ends tomorrow, which is the 7th, which will be today when you're watching this video. Apex also has a 90% off sale that ends on the 7th. Take Profit Traders ends on the 7th as well, 40% off all accounts and no activation fee, and then keep all your profits until November 7th. Since you guys watched until the very, very end, I'm going to give you guys a chance to win a free account with my favorite funding company. I will be giving away a 50K Blue Nox evaluation. To enter into the giveaway, all you got to do is subscribe to my channel, like this video, and then comment below which clue do you see in price, and if I'm missing any, comment that below too. Say that you see displacement the most, and maybe you see one that I didn't mention in the video. Comment that below. And then on my website, subscribe to this newsletter here. You just put in your email, push subscribe. I will put the link to my website in the description. And you can also click it right now on the right-hand corner. If you like how I teach and like how I trade and want to learn more, you can join my YouTube membership. It's only $3.99 a month. You get analysis every day after the market closes. We review the price action of the day, go through the best setups of the day, and then I give you my high time frame analysis, which is on point. I think since I've been doing it the last 3 months, I can only think of a handful of times that I've gotten it wrong. That is every day after the market close. And then 3 times a week, I hop on live streaming and trade for about an hour and a half, 2 hours. I'm just now getting to the point where I'm doing well trading on live stream. It was quite the adjustment. It's becoming easier to subscribe to that. You head over to my YouTube channel, and then right here it says join. You click that and it'll give you a little walkthrough video. And then there it is, only $3.99. Most people that are doing with this would be charging $200-300 a month. I made it super cheap for everybody. And then if you are subscribed and you're not getting the notifications from my live stream, then when you come to my homepage here, make sure that you are turning your notifications on. So you're going to want to go down this drop down menu and go to all. And then that way you will get all my notifications from my live streams and all that. Otherwise, you're most likely going to miss them. And I don't want you guys to miss them. Thanks for watching, guys. If you want to learn more about ICT concepts, click in the right-hand corner. That is a playlist of all of the ICT concepts I made videos about.